First, we're going to start off with the fixed rate mortgages, or FRM for short. The next one would be an ARM, or an adjustable rate mortgage. There's also interest-only mortgages, where essentially for, again, a short period of time, you're only paying on the interest. FHA loans, essentially federally backed loans for lower to middle income families.
What's the next one?
VA loans. So loans that are zero down payment. They're guaranteed by our Veterans Affairs Department for any active service members as well as retired veterans.
Yeah, and actually VA loans, a lot of people don't really understand this, but I never really did actually until like 5 years ago. I guess I'm outing myself. VA is actually the best product to accept.
I would agree 100%.
Yeah.
VA is powerful. It's going to allow you to also provide a service member or veteran with the opportunity to purchase a home at no down payment cost, which is going to provide them a lot of flexibility to offer a strong offer when they come in. You also get to partner up with the appraiser, unlike any of the other loan types where it's called tidewater effect, where essentially when the appraiser comes in, they're requesting the assistance of the agent to help them come up with the appraised value by using comps as well as a professional walkthrough of the property.
Yeah, you're on the same side of the fence versus trying to tell them they're wrong if the price comes in different than list price or purchase price, right? Sorry, purchase price, not list price. What would be the next financing?
USDA loans, and I actually have a unique story about that. So I had a client that was struggling to get an offer accepted with FHA. Nothing, it was just more the homes that we were looking at in that price point needed a little bit more repair work, so that down payment closing cost total in conjunction with the repair work items, we weren't able to really come to a good term. So they were looking in the Clio, Michigan area, and what was nice about that is when we looked up Clio's information and what's available, it's actually a rural community in certain areas. So this home was actually in that original rural community charter. So we were able to explore a zero down payment, saved our client 3% of that down payment, cost 3.5% by going that route, as well as getting them into a much easier, less stringent situation in the appraisal.
Love it. Yeah, USDA is a prime product. And part of the reason they created the USDA is they didn't want people to desert these farm communities. They wanted to grease the wheels to still live there, right?
Correct.
Okay, what's the next one?
Jumbo loans. Essentially, a jumbo loan is allowing someone to exceed the term limits or the viable limits set by Fannie Mae or Freddie Mac. And it's targeting more large-scale purchases, people that are going to be able to come up with a large sum cash down payment, as well as pushing into those higher dollar luxury style purchases.
Yeah, and usually jumbo loans come with a whole different set of parameters, and it is dealing with the luxury clientele, right? 6, 7, 8, 9, 2 million, 10 million, right? These sort of things. So they come with a whole different set of parameters. Not all lenders do them. There's certain lenders that specialize in them. So if you are a high net worth person looking to buy a luxury property, a jumbo loan is probably the loan you're probably going to get into. And reach out. We have great contacts for that.
Absolutely.
What's the next one?
Balloon mortgages. So essentially, you're committing to a lump sum end of term payment to pay off the remainder of the mortgage. And then by doing so, you're getting a little bit of a better deal up front for a term of 1, 3, 5 years, whatever that balloon is, if you will. So you're keeping your payment low up front, but the risk you're carrying is that if you're not polished with your finances and you're not able to project out that far to save that money for that long-term payment, you could risk losing a home at the end and you've built no equity to it.
Very common in the commercial space.
Very common.
Right. So you'll have a 25-year term, but a 5-year balloon, meaning at that 5-year mark, or 7, sometimes you can get 7, but at that 5-year mark, you need to refinance. And that's because the lender doesn't want to carry that commercial product for 25 years. Right? They don't want their money at risk like that for that long. Balloon payments are also common with hard money lenders, right? Usually it's some type of like outside financing. You're not going to call big box lender and get a balloon mortgage typically, right? Because they're not backed by Fannie and Freddie. These are going to be regional, local, private, those sort of things, or commercial financing, right? Where you run through a commercial financing department for a commercial building. And last, but certainly not least, what do we got?
The loan I used to buy my home was conventional loan. So essentially, you're not covered or insured by the government issued loan. With the conventional loan, you're going to come usually with a little bit more of an out-of-pocket cost.
Well, if you have any questions for Anthony or anything real estate, go ahead and give us a call. We'd love to talk. Thanks.
Thank you.